And it's actually the reason I looked into that is because I had a client reach out to me literally this last week, and he's like, "Hey, I got 2 property tax bills. One's blue and the other one's green." And I'm like, "Oh, interesting." The first one's probably just gonna be a copy. That one gets paid through your property through your escrow account. Like that one's okay. And then he's like, "But the green one," I'm like, "Oh, it's supplemental. It's a one-time bill. Don't worry. It's probably gonna be a few $1,000s. Like, I'm sorry. Unfortunately, every time you buy, it gets reassessed, so the value, goes up." And then he sent me the bill, and he's like, "Yeah, it's not just a few thousand. It's 8,000." And I'm like, wait a minute. Send me the bill. And I went to look at it, and I realized that there was a increase of 6,000 among other costs that then at the end said it was basically adjusted because of Prop 13. So I looked into it, and it turns out in certain pockets, in certain areas, this Prop 13 basically, implied a higher cost once they moved in. They purchased a house last year. This time around, when they went to go pay property taxes, it was substantially higher than what I've seen any supplemental bill be. Yeah.
So what's their solution in this then? I mean, they're being stuffed an $8,000 bill.
Yeah.
And what is the outcome for them?
So we called to see if their escrow account could cover it, based on what they have on there. But unfortunately, there isn't enough to cover the whole amount.
Not.
There's, of course not. So what they're going to have to do is unfortunately come out of pocket and, pay it this one time. And, unfortunately, it is a pay.
So this kind of brings up the concept of like how property taxes are paid in different places. California, like a lot of things, likes to be an outlier in certain things and do things in a very creative way. And so I know that we have, in some cases, benefited from Prop 13 and then been punished or it's been punitive in others. But I just wanted to talk a little bit today about, because of this, like there's a problem for people outside of our area that's becoming something that we are having to get more familiar with. And I'm going to bring up your Pennsylvania transaction from a couple months ago about that property tax. Remember that one? It was like $37,000, something like that. Was it Tennessee or Pennsylvania? Sorry, I forgot the state.
No, it was Pennsylvania.
Okay, so, there could be a Tennessee one, that's fine too. But like I know in Texas, property taxes are commensurate based on property assessment. And so one of the things that the article that Brian brought to the table was about how, when there's rapid increase in home values, that also in states where the tax is commensurate to the home value, that ramps up people's tax expenses as well. But if their income isn't keeping pace with that, they can find themselves in big trouble really quick.
Yeah, and I mean, the whole thing about Prop 13, when it was established back in 1978, it was all about, making sure that there's affordability, making sure that, the state just doesn't increase their property taxes. So they want to put it at that 1%. So this kind of, when Brian spoke about this story right now, I'm just like, whoa, well, how? How is it that, one, your escrow can't cover it? And how is it that we miscalculated or the lender miscalculated what that impound should be to cover whatever that supplemental tax would be? But in this case, you're saying it is not a supplemental. It's an $8,000. Like what this purchase price was, like a $2-3 million home?
No, it wasn't. It was around $750.
Yeah, the math is not mathing, Andy. We missed your data here now.
I'll show the property tax. I could show it so you could share it on. But basically, at the bottom of the property tax, it says Prop 13 approved tax, and then $6,000 among other costs, and then totals out to like $8,000.
So is it possible that the Prop 13 that was connected to it has been rescinded? Because it would even though it might be called supplemental, it would be supplemental in the sense that the previous owner who had the property taxes fixed because of Prop 13, the new buyer is not subject to that. The property's not subject to it anymore. Yeah. So now they're going to get reassessed at value now. That's like the argument against the California method that they brought up even in the article. It's like they use the term, I want to make sure I say it right, horizontal equity issue, which is when you have two homes that are like right next to each other, one that's been there for like 40 years, someone's owned it for 40 years, their tax basis is super low.
Yes.
And then you move in next door in a similar model or a couple doors down, similar model, exact same house, same square footage, same number of bedroom, bathroom count, but you bought it today's price and you're paying today's tax rate, and it's this, very lopsided tax bill. Now that's kind of, you could play that both ways. Like, well, that's just the cost of doing business in days like this, right? Well, if that person that had the low tax base is going to move and they are not qualifying for Prop 13, well, then they're going to end up being at a tax high basis too.
Yeah.
But in other states like Texas, their whole argument is, well, if we just have kind of more lateral tax so that everyone's property is paying, or they're paying commensurate to the amount of the value, then it doesn't matter when they bought it. It's just based on what it's worth.
Yeah. Correct. Which is a lot different than California.
Yeah, absolutely.
I mean, way, way, way different. Over there, there it's like, wait a minute, the school district, we need more payment. We need to pave more roads. We need to cover that somewhere. So where do we go? We go towards the homeowners, which for me, it's kind of, that's not a cool thing to do.
But the offset is in some of these same states, they don't have income tax. So kind of the justification, if you will, on the budgeting side. Now, I didn't know I was going to bring this up right now. Well, right, but
that way.
But what I was going to say is this ultimately becomes like a budget matter, because if you're the state and you have income coming in from all these varieties, well, you don't have income tax coming in.
Yeah.
So if you don't have income tax, it's coming from property tax. So we in California, we have a flat property tax, 1%, but we also have income tax, and all the other taxes. But the way that revenue comes in looks different, and so then it's weighted one more way than the other, because it's not at all in the income tax sense.
Yeah, no, absolutely. That makes perfect sense.
So, I mean, in the end, I can't say necessarily it's like it's good or bad, because look at where we've seen migration go. Migration has gone to a lot of people or a lot of places where they do have this kind of this tax that kind of adjusts year after year or every 2 years, but people are like, well, I'm not paying income tax because I'm retired, so what am I going to do?
Yeah,
I think it's the way that they see it. They feel like they're not paying it up front; they're paying it in the back end. So it's like, oh, I'd rather pay it where I don't see it than it come out of my pocket that I, take home and pay.
Yeah.
So I have a couple thoughts. First of all, the whole issue with it getting qualified, I mean, I don't want to say like this is an oversight on the underwriter's case, but I mean, if you know that there's $8,000 of like step up in tax, that if it's not one time, if it's one time, that's one thing. If it's not one time, and that's like a reset of what the tax should be, that means they would have had to have enough margin in their DTI that
to have covered that.
You follow what I'm saying? Because that $8,000 over 12 months is what, $750 a month or something like that. That's a lot. On top, that's what I'm saying. On top of, that's a lot. So. Anyhow,
and going back to why people are, they're going to other states. There's also a lot of people that are actually just staying put here in California because of that luxury of that property tax that we do have. And what's cool about it with our Prop 19 is when you originally purchased that property, that tax stays, that assessment stays there. So we've seen, for instance, my mother-in-law, when she bought her home, her taxes are like, I want to say like $600 or $800 some dollars a year, and they gradually go up, because they do go up, but very gradually, So those are some of the benefits, and that's what's actually allowing a lot of people also here in San Diego of giving them a reason why not to sell.
Right. Yeah, because their acquisition is like, 30 years ago, 40 years ago, 50 years ago. Their basis is super low, and their cap for annual increases is also very low too. The thing that I think sometimes people, and I've answered this question years ago in the past when I was originating, is like, well, why is my bill higher this year than last year? Isn't it flat? And yes, sometimes there's bond measures that we as voters, even if we didn't vote for it, the consensus was we're going to vote on behalf of this tax to fix this thing or build this whatever, and that gets applied to everyone's tax jurisdiction in that jurisdiction. Most people don't look at all that there's like a tax on local properties around this area for mosquito control, and that's on
vector mosquito,
vector control, and mosquito surveillance.
So there's like stuff like that, and you have stuff for the community college or for Southwestern College, and you have other things for the school district, and so bond measures that make their way to ballots that then are tied to property taxes end up showing up on your bill.
Gotcha. Yeah, that makes perfect sense. I mean, I like it. I like, not having to worry about like putting the net, when you have a, like when you go to Florida, right? Like you go to somebody's pool and it's covered. They have this covered to avoid intruders like mosquitoes.
A lanai.
And so, we know Will loves his cologne too, so
that's Texas. I went over there. I'm telling you. I love Texas. It's all good. I won't mess with Texas either. But I've gone over there. I put my lotion, the cologne. Man, them mosquitoes, bro. I
love you.
Dude, Jesus.
You're like a target.
And so here, the luxury of paying into that mosquito surveillance, I just feel like it's much better.
Yeah.
And I think it's a dollar well spent.
And I just brought that up only because, some people don't take time to actually look at how their tax bill is broken down. Yeah. And then when they go, well, why is there this adjustment, or why am I paying $50 extra a month, whatever, there's something that has changed since the last time you looked or the last time you got your bill.
Yeah.
And just be aware of that. If you don't know, you can ask one of the guys. You can send us your tax bill. We'll look at it. But my point in general is just be aware of what you're being taxed for and understand how the tax rules here in California work. Yeah. Or if you're moving out of California, you got to understand where you're going because of the situation that you had a couple months ago where an escrow, and you're like, wait a minute, what's this $37,000 tax bill connected to closing the deal? So do you want to talk about that?
No,
or do you
I
want
mean, that's just crazy. It's just every state has a different transfer tax, and city, right? State, then the city, what they charge. But going back to the taxes, I like that you bring up that point. When you look at your taxes, the great thing about it, at least here in San Diego, when you're seeing the taxes, it gives you a breakdown of where your money is going into what department. And they actually put a phone number there, which is pretty cool. I had a client that here in San Diego, we have what's called a Melrose. It's an additional tax to your property tax. And so usually it'll stay there between maybe, I want to say like 20 to 25 years.
25 years.
And I had a client that needed to qualify in order because it was just the income was so tight, right? And so the property was going to be 23 years since it was built. So it had 2 more years of Melrose. So we were able to contact that number for that Melrose where it pertained to, pay that off, and
smart.
that reduced,
property tax.
put us in a position. Exactly.
Okay.
So that put us in a position where we qualify. That's how tight our debt to income ratio was.
Wow.
That we had to really get creative.
Yeah.
And so we were able to pay that Melrose. And the reason I thought about that is because many years ago, I had a client where she was refinancing. She's just like, I just want to pay the Melrose.
Like up front.
Up front. I just want this is my forever home. I'm paying that all up front. And so she did. And so those are cool things that you can do. Yeah. So that's a cool thing. Pay attention to the property tax bill. Just look at those numbers and then familiarize yourself with it if there's any concerns with it.
Yeah. Nice. And last thought for me on this, guys, was just that, there's going to be like this whole reassessment process, and there's constantly things that are going to be brought up or considered or try to retool to try to balance out whatever imbalances there be. But my note to the audience at large is just be aware of what the local stuff is first, then the county and state stuff second and third, and then all together. I'm not saying only number one or whatever. You have to know them all. But if you do not know them, take one step in the right direction and get yourself familiar with your own tax bill, so you're aware of which things are changing, how frequently they're changing, and then what those changes mean to you.
And that's it. And then when you're buying out of state, you brought up that point of $37,500 for our last transaction that we did in Pennsylvania. That was just a transfer tax on top of the 20% down that they wanted to put down because they sold a property here in Poway. They just wanted to make sure that they go. And a lot of those funds were because of the school district. And I was just amazed how expensive some school districts are.
Well, remember, you had come in and you were like, hey, guys, I just went and dropped off my checks because I was building the ADU. I had to go pay the Sweetwater Union High School District. I had to go pay the Chula Vista Elementary School District because for proportionate to your square footage you're building, and you have to go and pay that to the school because now we're generating tax revenue for the education. So
that's it.
There's that.
Yeah.